index. Amit Jeswani is with us. He's founder and chief investment officer at Stallion Asset. Amit, good afternoon. Great to have you with us here on CNBC TV 18 as always. Thanks for joining in. And, you know, we're chatting after what has been a historic week, extraordinary in terms of the moves, volatility, and I think a week we will all remember, especially that Tuesday. So let me begin by asking you what you did over the last week. Did you go through it without doing anything? Did you do a lot? Well, just give us a sense.
Prashant, we were chilling in life. So largely we had no exposure towards B2G. My exposure towards B2G was 2.5%. That too had to cut it off on the on that exit on that main election day result. It's just that me and B2G are not friends at all. It's very tough to have conviction for us. We had one renewable company where we had 2% allocation and one other small 0.5% weight. So that was our entire allocation towards somewhat B2G, but we went to 0%. But that was the only change that we made to our portfolio. Typically in our portfolio, Prashant, we always have 20, 25 stocks in the wait list. So if we move, if we think something may not do well, our risk management systems, alert us and we just move to something else. And that's what we did this time also. But our exposure towards B2G historically has been very, very, very low. So all these things don't impact us. In fact, according to us, if things would have got even worse, we would have outperformed even more. But we are happy that things have not gone worse. We have Modi ji as our Prime Minister. And for the next 5 years, we hope to make a lot of money. And these are times where, whenever you get a dip, we have to dream big and execute very large things for the next. I believe a lot of people, a lot of investors will completely change their net worth and they will move to a next orbit of their lives. We will see massive number of billionaires from the equity market going forward. I'm super bullish.
Yeah. No, that's well put. And this bull market that we have already has done that for many people, right? More than I think any other past bull market in that sense. Amit, from your, not B2G, as you said, you're not friends, B2G and you, but anything else that you bought, or were you fully invested, or you don't have cash? Because it's not just B2G, but everything, you had that swoon everywhere for at least one day.
Yeah, that day we were in panic mode, so we didn't do so much. So we ourselves were in panic mode, but we have allocated 8% of our portfolio to real estate over the last 1-2 months. I would say that's a new sector that we have identified. What the two best companies? So if you see the real estate space, there is clear signs of consolidation happening. The market leader, the two best players. Like stocks are not recommendations. Whatever I speak about, these are just examples. Me, my family, my clients, everyone will have vested interest in virtually whatever we speak. We keep trading very aggressively. We buy, sell all the time. But stocks like Godrej, which have been growing at 37%, 5 years, Prestige, which has done 5-year CAGRs of 42%. These are now looking to be getting into that. We've just entered these two real estate companies, and these are about 8% of our portfolio. And they've done well already, like one of them is up 20%. So in 1 month. So those are the kind of changes that we have made. We have cut capital markets a little bit. We have 10% allocations to capital market right now, around 10-11% to capital markets. So in our beta portfolio, we have 10% capital markets, 8% real estate, and 2% financials broadly. So that is my beta part of my portfolio, which is a high beta, but I want to make it large there.
All right. Hi, Amit. Good afternoon and good to see you. When the last time you joined us as well, you were telling us about Godrej and Prestige. They were the two you liked from the real estate space. And you're sticking by them and you've cut some portfolio allocation to the capital markets. Got that. What about your top weighted stock? I think it was Polycab, right? And then followed by Zomato. Trimmed down positions on both those two?
I don't trimmed down. I don't know. Polycab remains about 9.5-10% of our portfolio, to by the best of my knowledge, because these stocks have gone a little volatile in last 3 days. So typically I know the exact weights, but it's around 9.5-10% of our portfolio. The gains have been phenomenal in Polycab, but if you think about it, this quarter also, Nigel, Polycab grew at 29%, KEI grew at 18%, RR Kabel grew at 15%. And think about it, KEI total fixed asset is about 770 crores. Polycab, 770 crores is total fixed asset of KEI, which is the number 2 player in wires and cables. And RR Kabel is 550 crores. Polycab has guided for 1100 crores of capex for next 3 years. Every year for next 3 years. Basically, they want to create 1.5 times KEI every year for the next 3 years. So they are so optimistic. It is very tough for me to cut positions, because if I cut position, I have to buy something else. Because you're just moving in our world, in the fund, like in my industry, like for Stallion, we don't have cash position. We don't time the market so much. All we are thinking that if we are selling A, we are moving to B, and is B better than? So I'm not able to find a superior investment criteria stock right now. So we are sticking out in Polycab and Zomato as well. 74% growth. It is fundamentally very difficult for us to sell out Zomato, which is growing at 74%. Blinkit is now at 4,100 crores GMV, Nigel. If you do 4,100 crores into 4, that is $2 billion. It is equal to 16,000 crores. That is broadly $2 billion GMV. Amazon GMV is $18-19 billion in India. I think they will become very, very, very large. I don't want to say anything, but this fast commerce, this quick commerce space, it's booming. I don't know what these businesses will look like 1-2 years from today. So till the time they are growing at this pace, we cannot sell them because we don't have alternate. What are you going to buy? Your McDonald's is growing at 2%. Jubilant is growing at 3%. In quick service, in this food service space, you need market leaders, high growth, high ROC, and customers are loving the product. So those are the kind of bets we take. If you see the last 5 years of winners, Trend, Polycab, Persistent, these were growing when everyone else was struggling. And that is what we do. We divide India in 71 industries, and we find in each industry who's that player who's scaling and gaining market share.
Got it. All right, Amit. So we've got both those two. You like a couple of these counters. I wanted to ask you about the cement space as well. For the time being, just take a look at some of these stocks. Sagar Cement. Let's move to the high point of the day. We here at CNBC TV, I told you, if Mr. Naidu is going to return back to the fore, he's going to be pushing through that Amravati agenda, then some of these stocks will do well. Sagar Cement, Ramco Cements, NCL Industries, KCP we already covered in the last week or so. So I'll want, Amit's comment on this. For the time being, though, let's...
Amit is still with us. Amit, any thoughts? Do you own anything here? And your views?
Yeah, we have 3 names here. We have Varun Beverages. We have a small company from Bihar called Aditya Vision. We have PG Electroplast, which we added lately last quarter only. So these are the 3 names that we have. We like PG Electroplast, who's a contract manufacturing company from Noida, but they're gaining market share very aggressively. When you compare it to Amber, their ROCs are 21%. They've guided for very high growth. They've been scaling up very well. For those are the and they've been reinvesting capital at very high ROCs. So our patterns are the same. You want leaders who's gaining market share, and they are the fastest. When you compare in the AC industry, they are the fastest growing ones. PG Electroplast there, and we got it at reasonable prices. Then you have Varun Beverages, which is our favorite. They already said in the con call, which happened, that they are at 100% capacity utilization. So if that happens, ideally the growth should be extremely good for Varun Beverages. And the third one is Aditya Vision. Hopefully they do well.
Okay, all right. Since we're talking about the summer, Amit, I'm not sure about your preference, but what about some of those, the beers, beer makers, home distilleries, United Breweries? I'm not sure whether you have knocked in a few, but what about the views on the stocks? There's that other factor that's played out that Mr. Naidu has promised better, that the liquor that's being served in Andhra Pradesh will be of a premium quality or something on those lines, and that's why a lot of the Tilak Nagar and the likes are running along. Do you all have any exposure there?
No, we don't have any exposure. We don't have it now. We had Tilak Nagar. We sold Tilak Nagar. We've never been able to understand why it doesn't get valuations. Aurora Ji doesn't get valuations, but Som is a scaler there. United Spirits doesn't grow. They've changed managements, but the growth has been very lackluster. Radico Khaitan is the guy who keeps gaining market share. So if the valuations were cheap, I would buy Radico Khaitan. We had at one point of time Sula. in our portfolio. Sula, for every 1 teaspoon of wine which is had in India, 100 liters of whiskey is had. So the opportunity size for Sula is extremely large. And 70% of wine drinkers are women. So if you want to bet on women drinking wine, Sula's and the revenues are just 500 crores today, and it is 50% of the market. So it's a kind of opportunity we look at, but the growth is very at 5, 10, 15% growth. Actually, we get such high good companies that these 5, 10% growth stocks, we are not able to, like, it doesn't fit only the portfolio. We are not able to sustain in the portfolio. That becomes a problem for us.
Quite a lot of passion there while talking about some of these stocks, Amit. But for the time being, what I understood is...
I have the vision in my head is of a teaspoon, Amit having a wine in it, spoon.
So Tilak Nagar is out. So as of now, there's no much exposure in the portfolio to the alcohol stocks, as of now.
No, as of now, we have no exposure.
Just a consumer, not investing too much in them. Okay. All right. So those are a couple of fancy sectors. But I wanted your view, Amit, actually on the cement pack. And I'm just going to run our viewers through a day. Amit, your view on some of the cement companies. Do you all have some exposure out there?
No, Nigel, we've got no exposure towards cement companies. Actually, none of them are like super high growth. We typically want 14% is a minimum nominal GDP growth. We want companies which can grow at 1 time, 2 times faster than that. So we don't find in our frameworks companies who can grow at that pace, at least for now. But if there will be, we will have to look at this sector again. And then also you need higher ROCs of 20-25%. Your companies are reinvesting at 14% ROC, Ultratech, etc. Shree was the only guy who used to do that 18-20% ROCs. But that is also now, that's not an easy trade. So we have other companies who are reinvesting capital at 20-25% ROCs. We want to be there.
All right.
Anything new you want to highlight? I mean, we spoke about NetWeb, DOMS. Amit, last time you were on. Any addition, anything else on the radar?
Prashant, we keep looking. Like last earnings season was not a great earnings season. There were new additions like DOMS, PG Electroplast we added, Dixon we added, but Dixon we added at 8,000 levels. Today is 10,000. So I don't want to speak too much about it, but that is becoming a monopoly in mobile phones. If you see, they have added this company called iSmartu, which will do around 8,000 crores which has done 8,000 crores of revenues in FY24. The PAT was 200 crores and they acquired it 51% stake at 200 crores. Basically at free prices, Dixon got iSmartu. They are Xiaomi scale-up will start. So 17,700 was the revenues for Dixon in FY24. I think they will do anywhere between 30 to 35,000 crores in FY25. This one is also reinvesting 100% of cash flows at 30-35% ROC. Monopoly in mobiles, LED, manufacturing, 35% market share in TVs. Basically the same game. And electronic, we are looking at this electronic manufacturing theme very aggressively. So this quarter we added Dixon but Dixon's up 25%. So I don't think it's a good idea for me to speak too much about it. PG we added. We keep looking at what we have in our portfolio and how do we get better. And yes, but there are opportunities. I feel Prashant, I honestly feel if someone's ready to work hard or can give the money to us, either ways, a massive opportunity there, because there are a lot of entrepreneurs. You should avoid 5, 10, 15% growing companies now, because if Modi ji is there, see the last 5 years, which were the largest winners. That will tell you a lot about the next 5 years. Look at how APL Apollo scaled, look at how Persistent scaled, look at how Polycap scaled. These were all very small companies. India Mart, so many companies have become very, the market leaders. And hopefully we can do the same, what we've done in the last 4-5 years for our customers.
All right. Well put. And I think viewers are listening. So, you'll start... the phone will start ringing. The checks will start coming. But good conversation, Amit. Appreciate you joining us, and thank you very much for joining us. By the way, on Dixon, the management was with us, and they did say that actually that the revenue guidance for FY25 is that 32,000 crores as opposed to the 17 plus around there, what they did in FY24. So that is Dixon for you. Stock's done well. We'll take a quick commercial break here. A D-Street chatter with Nimesh as always. What is Nimesh picking up in terms of specific stocks? And of course, we'll put out some short-term trading ideas as well. Stay tuned.